Could this be the end for Hyperliquid? Hyperbole aside, now that I've got your attention, one of the best performing DeFi tokens of the year has been underperforming recently, and there are very specific reasons why. In this video, I'm going to talk about some of the reasons that Hype has been going down, Hype the token. I'm going to look into the on-chain metrics behind it and try to assess what the risks are for the future and whether it could turn around and outperform again. And before I get into it, remember that nothing I say in this video is financial advice. This is solely intended to help you do your own research and conduct your own analysis. Now let's get into it. To start, let's get a look at where Hype is today. Currently, it's sitting at around $32 to $33 as of the time I'm recording this video, down from a high of around $60 in September and up from a low of under $10 back in April. So it's been a year of many ups and downs, and the current price puts its market cap at around $9 billion. And if you were to look at the fully diluted valuation, that would be a whopping $32.6 billion. So actually quite substantial. And currently it's the 22nd highest market cap crypto. Okay, now that we're done with the basics of price, it has been doing quite poorly recently, right? In fact, the whole market is down, but if you look at the actual worst performing tokens in the top 100, Hyperliquid is one of them. In fact, Hyperliquid is on here twice because there's also a liquid staked version of Hype. Basically, it hasn't been doing as well, and a big part of the reason is that unlocks are coming. Let's take a look at the unlocks. So we have the unlock schedule starts in the start of December. So in about 1 week from today, you're going to have these tokens start to unlock. And those unlocks are going to continue for, in fact, a few years. For about 2 years, you're going to have these unlocks continue where core contributors get the ability to sell some of their tokens if they choose. And a big part of the reason why people have been freaking out is that the Hype team has unstaked some of their tokens. And you can see here, this tweet says that it was 2.6 million Hype tokens, and they've got a screenshot of the unstaking here. And I think there's a few ways to interpret this. And the goal with this video is to kind of give you a framework for assessing this trade going forward, not to tell you whether to long or short and exactly what's going to happen. But I'm going to try to give you a framework to look at this. So the Hype team, if you don't know, is notoriously lean. Last I've heard, there were around 20 people. I don't know if that's changed since then, but around 20 people. And this is for a company that is doing hundreds of millions of dollars in revenue, has huge amounts of volume being processed on their platform, and has a market cap, a fully diluted market cap in the tens of billions of dollars. I don't know what the allocations specifically of these team members are, but I would imagine it's a very lean team, even if they had a small allocations. Probably a lot of these people have a huge amount of paper wealth. And the reason I'm saying that is I saw some people posting things on Twitter that were like, Hype team, do the right thing, don't sell. They built this product. It is their right to sell if they choose to. I say that as someone who has been very supportive of this project in the past, and who it wouldn't necessarily be financially beneficial for me if they sell, but it is their right to sell, right? The vesting terms were very clear when the Hype token launched, and people have had a year to prepare for the fact that these unlocks are coming. That being said, just because they can, and perhaps if you're them, you feel that you should sell, realize some of those gains, it does have real implications on the price. And I think the first thing to consider then that I want to say is I think part of the reason people are freaking out is if they're saying, okay, there's something like 10 million tokens unlock from core contributors every month, right? Actually, maybe perhaps exactly 10 million tokens unlock from core contributors every month. If 2.6 million are unstaked this month, then one of the fears is maybe that's going to be the amount that are unstaked and sold every month. And by the way, we don't know whether these are going to be sold. Some of them could be like lent out. They could be deployed into the ecosystem. But let's say hypothetically that most of them are sold. The next question becomes, is that going to be the amount that are sold every month for the next 2 years? Or is this people realizing gains? Again, you don't know people's living situations, but perhaps some of the people are living very modest lives. Perhaps some of them are even struggling financially, and they have all this wealth on paper, and naturally they want to realize some of that. And then maybe, in a few months that pressure is less dire, and so they want to hold some more of their tokens. Like, we don't really know. We don't really know what percent of these will be sold, and we don't know whether that percent is going to be the same in future months. So the first thing, the framework I want you to sort of keep in mind is that as you assess this trade into the future, you're going to want to track whether more tokens continue to be unlocked and then what the selling behavior is. Because if we have 2 years of relentless selling, that's going to be like pretty not good for hype holders. But if it's like now and then some team members decide to unstake and sell, then I think that's probably something that can be weathered much more, especially by some of the inflows that we'll talk about later. The next question is, what is the actual dollar impact of this potential selling? And that's going to be really important to calculate whether it can be offset by future buybacks. With 2.6 million hype being unstaked, that's just under 1% of the current circulating supply. And if you look at the current price of around $33, we do some quick math. Basically, that comes out to around $85 million of hype that's coming onto the market that could potentially be sold. So that's a very substantial amount, right? That's very non-trivial. And I think that a lot of this price performance is that being priced in, right? And one thing I will say, from just having been around crypto in years, having spent a lot of time studying data, many of that publicly, is that the worst part of unlocks is almost always the period before the unlocks start, because you have this token, it's doing great, the app is gaining users, maybe it's gaining revenue, and then people start to de-risk, they start to take money off the table as it becomes clear that unlocks start to get closer in the future. And so I think that a lot of what we've seen over the past couple months the past month, is a combination of the market not doing well overall, and then the fact that you have these unlocks coming at the end of the month. But there are actually some positive things to consider that may make Hype's performance post-unlock even better than people expect. One of these is the fact that Hype actually has significant buybacks, and those buybacks are going to be hyper relevant, no pun intended, with unlocks coming in the future. So currently, over the past few months, Hyperliquid has typically had $80 to $110 million of buybacks in a given month. And if you compare that to, for example, the $85 million that we talked about before that could potentially be sold, even if all of that was sold, then a month's worth of buybacks at what has been the recent revenue rates would make up for that. And so in that sense, perhaps Hype is actually priced quite appropriately, where the inflows from buybacks could outweigh the outflows from unlocks and selling. And I doubt all unlocks convert to selling. And that transitions us nicely to the next part of this framework for assessing Hyperliquid, which is you want to have some kind of perspective on where the revenue will go in the future, because Hyperliquid uses its revenue for buybacks. And so in a great scenario, that revenue offsets or more than offsets selling pressure from unlocks. But in a bearish or negative scenario, if that revenue drops or it otherwise underperforms, then you could have a situation where the outflows from unlocks are significantly lower than the inflows from buybacks. So what are some scenarios we can map out here? Well, the first thing to consider is, what does the overall perp deck sector look like in terms of revenue, and what is Hyperliquid's market share within that sector? Thus far, even amidst a few weeks of lackluster market performance, we can say the perp deck sector has actually continued to make money at a similar rate. We can see that we haven't really had any substantial down weeks in quite a while, actually. Even over the past month, as prices were down, people have continued to spend money on perp dexes, and Hyperliquid is no exception there. And we can see, for example, its weekly revenue has been quite strong amidst all of this. So the first thing you're going to want to watch for is, where does the overall perp dex sector revenue go? Because in the event that this drops, even if Hyperliquid maintains its market share, then you're going to see holders' revenue go down, less money for buybacks, lower prices. And why might this go down? Well, the first reason is that typically when prices drop, fewer people are interested in crypto. Most people are buying crypto because they want to make money, and when they see that that is difficult or impossible, they become less interested. It's perhaps a psychological flaw, because when prices are down, that's actually a better time to buy, but that is how it is. And so as prices go down, typically it has this reflexive impact on activity, and so I would expect you would see that trading volume would go down over the next few weeks. The question is how much. The other reason why activity is, I think, likely to go down is that people just don't care about crypto that much right now. No nice way to put it. I'm very bullish on the industry. I work in it. But if you just look at the numbers, like, people don't care about crypto, not the way they did a few months ago, not the way they did at the start of the year, nowhere close to the way they did in like 2021, for example. It's just not as popular. And the result of it not being as popular is that you have less of what I like to call incremental altcoin buying pressure in excess of fundamentals, which is a long way of saying you have a lower speculative premium. You have fewer people that are buying altcoins just for the sake of buying them because they think that they're going to do well. This has, I think, been in a decline for a long time. I talked about this virtually all year, but I think that's continuing. And then now that you have like prices rolling over in many cases, it's only likely to keep continuing. Doesn't mean it's going to continue forever, but we do have this like slowdown in demand for buying altcoins that like is completely independent of fundamentals. And so as a result of this, it wouldn't shock me if perpdex revenues went down. And then the second question you have to ask yourself with this is, does Hyperliquid's market share go down? And a lot of this has to do with how you think that they're positioned in terms of product, how they're positioned in terms of users, as well as other things like the team's reaction to situations, listing assets, etc. And in the event that overall perpdex revenue drops and Hyperliquid loses market share, then you're going to see this holder's revenue drop substantially. Inversely, maybe you think that Hyperliquid's actually going to gain market share, right? That's also a plausible scenario. One reason to think that Hyperliquid could buck the normal trend of crypto revenues going down as prices go down is that recently Hyperliquid has been rolling out perps on non-crypto assets. And the reason why typically crypto revenue goes down following prices going down is that most people are using apps to trade crypto. However, if they're using it to trade something else, then perhaps that correlation will not hold. You can see here that there's currently Nvidia, Google, Tesla, these are all relatively new, doing tens of millions of volume a day. Another deployer also has Tesla, Circle, Nvidia, Coin. But basically now you have access to all of these tech stocks as well as some other assets on Hyperliquid as well. Hope you guys found that helpful. I'm producing a lot more long written pieces about topics like this on my Substack, so check it out, newsletter.dynamodefi.com. And if you want more videos like this, be sure to like and subscribe. Until next time, this is Dynamo DeFi.